SN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
We're back. You're listening to the Financial Survival Network. This is Kerry Lutz, and it's Peter Grandich time. And Peter, it's all a dream. Anyway, gold is up close to $35 the ounce, but it isn't really happening, right?
Yeah, I joked with you and you rang because, we don't normally get days like this. And normally, especially around an FOMC meeting that just concluded, we're always talking about, why is gold down? So it was half of a joke. But it's really not a joke because you and I have had, in our last few discussions, we have pointed out that while the market was not going up, that they were no longer able to take and keep gold down. And that was a key factor in what I really think has helped lead to this explosion today, besides the fundamental and technicals out there, is the simple fact that so many people got short because of all these bearish predictions. And now we're seeing a very good short squeeze. And that's normally what it takes to renew an uptrend again. And that is that the people who got in on the last leg of the bear market down are always the ones that get killed the most, and they get killed by getting short and then getting squeezed. And that's what I think we're having today.
Hey, don't forget, there's some real bullish developments in the news that really haven't been properly digested. We got the end of the silver fix coming August 14th. 117 years, basically, they've been figuring out the price in first the Rothschild's office and now wherever it is. And there's actually an LLC called Silverfix LLC in London. That's ending, and the gold fix is on its heels. And not to mention the fact that the amount of metal available to fix the price in the West just isn't there. The supply is not there to keep fixing the price.
Well, there's no question. I don't want to say that it's only a short covering squeeze is why we're up. We've talked till we were, almost sick and tired of listening to ourselves on how this market both markets, both gold and silver, had been manipulated, that if real fundamentals were allowed and it was a real free trading market, we'd be a lot higher. And I think that's to come. I really do think, despite all the manipulation and all, we're at the end game, and finally people are wising up. These last few months has been very important. Multiple countries are now going, "Hey, where's our gold? Can we see it? Can we touch it? Can we have some?" I think we're coming to the end of the great manipulation, and it will coincide with, like I said, with most of the people being on the wrong side. And realistically, I think it's also important to recognize that much of the attention in the last couple of years has been paid to the equity and bond market. Very both overextended, very well overbought. The natural tendency will be, as the public sees what's happening in the gold and silver market, to see some of that money seep out of there into something that's been driven way down, which many people have said historically some of the mining shares were literally being given away compared to what the real prices of the metals were. So I don't want to get too excited because, we've been seeing, we've gotten a sniff of this in the past, and then the manipulators show up. But I really think this is as close to the perfect storm that we had in years for the metals market, and quite beneficial. And I don't like it that there has to be very bad fundamental news out there with death and destruction worldwide, but that's happening, and that's also going to aid the rally in the metal prices.
I mean, when was the last time, Peter, that we saw a $35 up day in gold and even a 50-cent up day in silver? I just have to look at the charts, but I just don't remember when it was.
And what's very interesting, and what one of the only, maybe on my right hand, people I've met that have successively traded markets for decades and made money. I've not been one of them, but one that I do know had been stated to me in recent times about the metals, who he had returned to after almost 4 years of not being trading them on either side, said to me that most recently this is a classic, never short, a dull market, that the metals had gone into a very narrow trading range, and despite everybody predicting they should be going down, they weren't. And he felt that it was getting ready to make a big turn and a big pop, and it just needed an ignition. And it's had it. There's no question. From my mind, I hope I do turn on Tao TV, and they're all saying it's just a fluke, and they're not jumping on board, because when that guy that rings all the bells and whistle gets on, it'll be almost time to get out. But the bottom line is, I really think we really have all the ingredients, or mostly all the ingredients now, to it done. We've had all those who've had to sell. We've had a great number of people go short. We had most people throw in the towels that were once very bullish, and the equity side of it, the mining share, even trickling down to the small exploration companies, have been so badly beaten, have been so reduced to almost nothing, and for such a long period of time, that there's just a natural tendency now that they will be able to run a lot better, because all the resistance is gone, because everybody that had to or must sell has done so.
Mm-hmm. Yep. I couldn't agree with you more. It's just looking like the capitulation ran its course. I mean, I still think we could have another bear raid come early to mid-July in gold. I just feel like silver has run its course. But interestingly enough, Peter, silver breaks $20 and gold breaks $1,300 the same day. Technically, that is hugely powerful to have them both break huge resistant points the same day, right? I mean, what more powerful signal can you have than that?
Yeah, for a matter of, say, trading days to a few weeks, that's important. But some of the more important targets will be if gold can take out the 1400 level. That's going to be an extremely, not just because it's a round number, extremely breakout level. And then it will face its really own resistance after that, will be where we broke down a few years ago from the 1500, 1550.
Yeah.
But there's no question now that what technical charts turning bullish are going to bring in the momentum traders, the money flow people. Mm-hmm. Those are the things this type of day is going to attract. And I think it's going to be much more difficult for the manipulators to do what they normally do. And I also think the tide has turned against them in terms of they've been able to almost operate in a carte blanche atmosphere, that there was no one, there was a commodity, commission that looked, and they went away, and there was a sense of invincibility until what broke in Germany, and then other countries getting very concerned about it and asking for gold and not being able to get it. And I think that became a real concern. And then this is only, we don't have any smoking gun on this, but there's been a great argument, and I've been a believer of it, that a country like China has used this period to be a great accumulator of gold. There's been a great transfer of gold from the west to the east. And, those type of people not going to say anything till they accumulated what they wanted. And then suddenly I think they say something. And one of the things I think is going to come out, and this is just total speculation on my part, Kerry, I don't have anything to point other than 30 years of being around. I think some sort of new alternative to the U.S. dollar with a gold backing world reserve currency, I don't know. But I think the combination of that, and so many countries now announcing that they're moving away from the dollar as a means of trade, I think we're getting close to something like that. And my feeling is, and a few real experts on this that I still speak to and read their work, suggest that if something like that is done, gold will need to be priced somewhere at the 2,500 to 3,000 level to justify that. And that is the longer term 3 to 5 year target that I think we'll start to talk about as this new bull market arises in both gold and silver. That is a number that where we would need to see gold to have any real meaningful as a backing to a new currency.
Yeah, I think all of them are a possibility, Peter. I think it's a little early to know for sure. Certainly the instability in the world that's taking place now, I think a lot of it is probably directly traceable to the instability of the dollar and the instability of the leadership and the political system in the United States. I mean, you just look at what's going on here in the United States with the budget deficit, the trade deficit, and the leadership deficit that we've got. And it all translates into a confidence crisis for the country's traditional allies and even the non-aligned countries and the enemies, who see that they can basically do what they want to do, and there's nothing that the U.S. is going to do or wants to do to stop it, and all of that combined,
I was so amazed in the last couple of days to read some of the strongest left-leaning liberals come out so against Obama and really talk about his presidency being a failure. But the only thing that has stopped it from being on the daily news and being spoken by the average person has been the stock market being artificially kept up by the Fed. It's given an illusion that the economy is doing better than it really is. And that's the only thing that the president could even point to and say, at this point, something to try to take credit. I mean, it's scandal-ridden, both here and abroad, just totally scandal-ridden. When you think about it, we can start wherever you want to start, going all the way back to Obamacare, Benghazi, the IRS scandals, the vets, the release of terrorists. The way he gets rid of a scandal is he just gets a new one, so the old one gets off the front page. And the only thing I think that's really kept it from being just a universal call from the man's head has been the stock market has given an illusion that the economy is doing well. And if I'm correct, and as I just literally put out, or this just before we went online in my update, that this time frame now of tomorrow's triple witching in the stock market and the employment release in July for June is going to be, in my opinion, the period where the ultimate top's put in. And why I say that employment number is, I wrote a couple of months ago, there's a wonderful, one of the few true independent financial journalists. His name is John Gradell. He's been writing for the New York Post for decades.
Oh, of course. Yeah, we know.
He has written an essay about how the Census Bureau in Philadelphia and elsewhere has fudged
the employment numbers. They've been lying about them. The Census Bureau. Yes. Totally fraudulent. Totally.
And have used historically in the April, May, and June reports seasonal numbers that always get shown later on in the year to be totally distorted and adjusted lower. We have one more of those to come. And an analysis most recently of it, if we took it out, there was actually no real new jobs created last month. So this is going to be the time frame, I think, that's going to set us up the major top in the stock market. And so if the gold and silver market has turned, as we really feel today it has, and in the next 2 to 3 weeks we get a major top in the stock market and it just retreats, not that it crashes or anything, that's going to be another beneficial supporting mechanism for this new leg up in the gold and silver market, which I think this year has 10% at least more in it, the price. So, I think, we can see 22, 23 in silver, and I think we can definitely see 1450 to as high as 1550 sometime before the end of the year. I do think that 1500, 1550 will not be something will be broken through maybe 1 or 2 or even 3 times because of how significant it was of support before and how much of a breakdown we had after we went through it. But I do think 10% plus for the remaining 6 months is a very doable target for both gold and silver.
Yeah, and really the strength of this breakout today, though, it's so impressive, and that it just took out $1,320 in one day. That's the kind of thing the power of the round numbers. But I agree with you. It's 1,500. And what are you thinking is the resistance point at silver now, Peter?
I think the 22, 23 area, I think, look, the one thing we don't want to have, as much as it would be exciting, I mean, I know
rapid,
people would like to say is that we just go up another 35 tomorrow. I'd sooner hear all the same people still say this is not real. I don't want to see those people switching and going, oh, yeah, I'd get on board. This is the new great thing. I hope we get the regular, this is just a flash in the pan, so to speak, pun intended.
Yeah.
But nevertheless, I think we have a really solidified it. And also, we saw it in the shares. We finally saw the shares starting to show some relative strength in the last few weeks, despite, when gold supposedly broke some key support. And listen, we can understand why. It's been 3 years of selling. You can sometimes things just get exhausted and go up because there's no more sellers. It's not that there's a great amount of buyers. There's just nobody left to sell. That's pretty well where the mining shares, I would say 3 or 6 months ago, out of the 500 groups of stocks on people's list, around between 498 and 500 was mining shares in terms of interest. So we have all the dynamics now set and feel pretty good about it. And as much as I know people would love to see another big day tomorrow, let's just say that this is a good starting point, and in the next 2 to 3 weeks, we start to take out the next resistant levels, and that's probably in gold around $13.40, $13.50, and silver around $20.75, $21. But what's more important and realistically is not only all the fundamentals coming in and the bearishness that has been in the mining shares and all, that the physical market is strong, because we all know, and we've argued for a long time, and hopefully this move is the beginning of the justification of what people like you and I have argued, that during these decline and these manipulations, the strength in the physical market was suggesting that the paper market was wrong. And hopefully now that's going to be demonstrated, because the physical market, the metals went into strong hands, and now the paper people can't push the market around anymore, and now they're in trouble.
Yeah, well, it's going to be interesting. So the next few weeks going to be important to watch, because we don't want to see it just get ahead of itself. But unfortunately, with all this big money in the market, change in sentiment, you could see the hedge funds reverse themselves on a dime, because they're all momentum players. They're all following the money, right? And you could see them just pile into this, right?
Especially if the stock market does peel off. Part of that, what's wrong in the financial institutions. I had this discussion in a seminar recently, and part of it is there's a sense among the so-called professionals that they always have to be doing something.
Yeah.
And so if that's the case and the stock market's no good and bonds are too high priced, well, they're going to flow into something that's been beaten down for a long period of time, and nothing fits that criteria better than gold and silver. So actually a declining stock market could actually aid, in this case, the precious metals market.
Mm-hmm. And you could see them going a lot into commodities as well, because if the market starts to sour, where are they going to put the money, right? It's not enough. The gold and silver precious metals markets aren't big enough, really, to accommodate all the money that they've got sitting there. So they got to find other avenues for it, right?
I do, but my suggestion to people would be is still have gold and silver at the top of your shopping list. That's the key metals, I think, and key commodities you want to have exposure to, because I think this will be as much concerns about monetary and economic as further of shortage. I mean, it's great that you want to own orange juice, but I think people own gold and silver not just because there's a potentially more demand for it than sellers, but because they want to have something that can represent real purchasing power and real money. And despite what the talking heads will tell you, the only real money out there is gold, and I think inevitably that will pay off. And like I said, I surmise, don't have much to say it other than 30 years of being around this, that all of this is part of a move to some sort of currency that'll come out that'll have some gold backing in it. And the other last thing, which we didn't touch on it before we run out of time, Kerry, which when I started the business was the number one driver for gold, and that is inflation.
Oh,
and,
yeah.
Because rates are so low, and people have been told that 2 or 3% inflation is not really a lot. The very fact that it's upticking the way it is beneficial to the gold market as well. So like I said, it's probably for the first time in 3 or 4 years that we've set up now to have most of the cards in place for a metals market to move substantially higher over a substantial period of time.
Yeah, so we've got technical things in our favor. We've got the actual physical supply demand dynamics in our favor. And we've got inflation, meaning not just price movement, consumer price movement, but we've also got the fact that the money supply, all that, we shouldn't say the money supply. It's really a question of credit outstanding continues to greatly increase. Government credit, government debt continues to expand at record rates. So that has to be a plus. When it comes to precious metals, they've managed to keep the lid on it for the past 3 years. Good. They managed to do it and drive out a lot of people and cost companies and cost employees jobs. Okay, for a government that says they're totally about getting people back to work, they've done absolutely the opposite. Peter, you know that?
Yes, and like I said. We paid dearly for it. We've seen teetering to the point of even the most ardent bulls feeling that there was no hope. But in the end, inevitably fundamentals take over, and in the end, at the end of the day, gold managed for a couple thousand years to be the ultimate source when money is really need to be counted on and to be used as a real currency, and that's what we're set for again here.
Well, J.P. Morgan said it best: gold is money, everything else is credit. And I think those words were true 100 plus years ago. I think they're truer now than they were then. And on that note, Peter, we want to find your work, read your postings. Where do we go to?
Sure. moneytalks.net. One word, moneytalks.net, and look at the column Peter's Content, and it's where I write my market commentaries.
All right. And we got the link on financialsurvivalnetwork.com. Don't forget, sign up for the newsletter. And Peter, we'll talk with you again soon. Thanks so much for being on.
Thank you for having me.
FSN Radio. It's all about what's next.
Warning, you might live in a no-constitution zone. It's the shocking story you won't see on TV. Depending upon where you live in the United States, you may no longer have constitutional rights. Politicians are quietly squeezing the middle class to micromanage you and extract your wealth. Want to see how? Watch the free video at noconstitutionzone.com. Soon, you'll have the last laugh by using these cultural contraband tricks and profit like a king. That's noconstitutionzone.com.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.